Let me ask you something. Have you ever been turned down for a loan, a credit card, or even an apartment and had absolutely no idea why? Or maybe you got approved, but the interest rate was so high it felt like a punishment. That happens because of one three-digit number, your credit score. And here is the thing nobody ever told you. You have way more control over that number than the banks want you to realize. There is a specific strategy, completely legal, completely free, that can push your credit score up by 50, 80, sometimes over 100 points, and most people have never heard of it. By the end of this video, you will know exactly what it is and exactly how to use it, so let us get into it. First, I want you to hear this. If your credit score is not where you want it to be right now, that is not a character flaw. That is not proof that you are bad with money. The credit system is genuinely confusing, and it was not designed to be easy to figure out. Nobody teaches this stuff in school. You're just supposed to magically know how credit works, and if you make a mistake, you pay for it for years. A late payment when you were going through a hard time, a credit card that crept up higher than you planned. Maybe you helped someone out by co-signing for them and it came back to bite you. Whatever happened, it does not have to define you. Your credit score is not a life sentence, it's a snapshot, and snapshots can change. So let me show you how. Before we get to the strategy, you need to understand the 5 things that actually make up your credit score, because once you see this, everything clicks. Number 1, payment history. This is 35% of your score. Do you pay your bills on time? Number 2, credit utilization. This is 30% of your score. It measures how much of your available credit you're actually using. This is where the loophole lives. Number 3, length of credit history, 15%. How old are your accounts? Number 4, credit mix, 10%. Do you have different types of credit, like cards and loans? And number 5, new credit inquiries, 10%. Have you applied for a lot of new credit recently? Most people only focus on the first one, pay on time, done. But they're completely missing that second factor, the 30% chunk, credit utilization. That's your fastest lever, and most people don't even know they're pulling it the wrong way. Here's what banks hope you never figure out. Your credit card company reports your balance to the credit bureaus once a month, and they report it right after your statement closing date. Whatever your balance is at that exact moment, that's what goes on your credit report. That's what shapes your score. Most people wait until the due date to pay their bill. That's what you're told to do to avoid late fees. And yes, that is correct for avoiding fees. But the problem is, by the due date, your statement already closed 2 or 3 weeks ago. Your high balance was already reported. The damage was already done. Here's the move. Pay down your balance before your statement closing date, not just before the due date. Same money, same spending, just better timing. Your reported balance drops, your utilization drops, and your score goes up, sometimes within a single billing cycle. Now, here is the second part of this. Call your credit card company and ask for a credit limit increase. Do not spend the extra credit, just have it available, because more available credit with the same balance automatically lowers your utilization ratio. Here's a simple example. If your limit goes from $5,000 to $10,000 and your balance stays at $500, your utilization just dropped from 10% to 5% without paying a single extra dollar. That is the loophole. Now, let me give you 3 more moves to stack on top of that. Move number 1, dispute errors on your credit report. Roughly 1 in 5 credit reports contains at least one error, an account that is not yours, a debt that was already paid but still shows as open, a late payment that was recorded by mistake. These errors can drag your score down unfairly, and you have the legal right to dispute them for free. Go to annualcreditreport.com, pull your reports from all 3 bureaus, and check every single line. Move number 2, become an authorized user. If someone you trust, a parent, a sibling, a close friend, has a credit card with a long history, a low balance, and no missed payments, ask them to add you as an authorized user. You don't even have to use the card. Their positive history gets attached to your credit file, and your score can jump significantly from just this one move alone. Move number 3. Do not close old credit card accounts. This surprises a lot of people, but closing an old account removes available credit and shortens your credit history. Both of those things hurt your score. Instead, put a small recurring charge on it, like a streaming subscription, and set it to auto-pay. Keep the account alive. Keep the history intact. Here's what I need you to take away from today. The difference between a 620 credit score and a 720 credit score on a 30-year mortgage can be over $100,000 in extra interest paid. That is not a small number. That is life-changing money. And everything you learned today, paying before your statement closes, requesting a limit increase, disputing errors, becoming an authorized user, keeping old accounts open, none of it costs a single dollar. It just requires knowing the rules. Now you know them. Start today. Pull your free credit report. Look at your utilization. Make one move this week. Your future self is counting on you. If this video helped you, hit like and subscribe. It helps this channel reach more people who need to hear this. And drop a comment below with your current score range. Let's track that progress together. See you in the next one.